Hi, folks. Robert Quigley here, Washington, D.C., the Money Pit Group. Today we're going to do a video on bear market investing. As we all know, part of the channel is to decipher Wall Street and to figure out good ways to trade, invest, and make money. So, of course, these are my opinions only, but I do want to make a record here of what I'm about ready to say, just in case it comes pretty close to being accurate, which I think it will be. But in the future, no one can say, well, hindsight was perfect. Well, here we go, folks. How would I invest in the bear market environment? Or what exactly am I doing? Let me lay out my thoughts for you. The society and the markets look and feel like a calm before the catastrophic proverbial storm. I would suggest if you're holding positions, never sell. Fear is growing. We can feel it just under the surface. Ignore CNBC and every cheerleading bout of optimism. We're headed for stagflation. We're headed into a lost decade. It's 2022 when I make this video. We're probably looking at 8 years of the lost decade. There's a buyer strike going on. Retail investors were wiped out because of Wall Street. I've touched on this in other videos and I'll come back to it. Wall Street is to blame. We're basically looking at a very low volume sideways decade. We can't pick the bottoms, we can't pick the tops. Only hindsight can tell us when they happened. But with those general statements in mind, here we go. What I'm doing is I'm eliminating all of the gains on both the indices and the stocks for all of 2020 and all of 2021. Then I'm taking a 500-day moving average going back in time from January 1st, 2020. And I'm doing that for both indices and stocks. Once I found that 500-day SMA, I'm subtracting 20% from that number. And this is what I'm going to call the bottom. This is the direction we're likely headed in. Why? We have outrageous inflation. This is going to prove to be worse than the 1970s. A recession is knocking at the door. In fact, for many companies, for many people in the society, just look at the skyrocketing crime rate. The recession is already here. We have massive Wall Street market manipulation. They basically ran up stocks and financial instruments and the indices during the pandemic years, gorging on the government free money and people's stay at home, lack of activities, investing in the stock market to fatten themselves. Not only that, we have a generational change underway. Large numbers of baby boomers have started to retire. As a consequence, they've left the workforce. They're downsizing or they're retiring in place. We're beginning to see an increase in 2 and 3 generational, 4 generational households. During the last 2 years of stay-at-home lockdowns, many people's life goals have changed. Their views of work have changed. And like I mentioned, just under the surface, we can feel the fear of a global catastrophe, global warming, war, commodity price surges. Folks are hunkering down. Many are just buying the necessities, food and gas. Even gasoline consumption has decreased by 30%. The amount of miles driven have decreased by 30% in 2022 alone. So what's the best approach? If you already hold positions that you picked up during the pandemic, hold them indefinitely. Hold the red. Don't sell at a loss. Don't reward Wall Street for pushing those prices up and then pushing them down again, hoping for weak-handed capitulation. Hold, guys. Hold, hold, hold. Unless the stock is junk, of course. Because they will come back. It may take a few years, but they will come back. Even if they came back half or 3/4, that's still better than selling as we head down. Better to close the account, go get a job, go read a book, go for a walk, do something totally different. Take your mind off the markets. This bear market and deep recession is unavoidable. Contrary to what the economists tell us, most people were not doing that well prior to the pandemic. 2019, if you talk to an economist, and before was oh so great, but take it from a guy who is down in the trenches and who owned retail stores and worked with everyday common folks. No, Americans have been struggling for decades. The news is nothing more than a cheerleader. We saw the desperation and the difficulty prior to the pandemic. For many people, the pandemic only got worse. So what do? We buy the indices or the stocks when they get 20% below that 50-day, 500-day SMA, or close to it. Doesn't have to be perfect, but that's the most reasonable target, as discussed above. And there you have it, folks. Essentially, the strategy is hold what you got. Once we have these catastrophic lows, well, obviously the words I didn't say, I'm going to say now, that would be the time to plow extra savings into current positions or new positions. If you're investing in current positions that you already hold, that's going to wind up being averaging down, which is only going to benefit you that much more. And you'll be able to pick up large numbers of stocks at those lows. All of these companies that are not reporting profits, all these sky high, pie in the sky types of tech companies that are promising the universe once they become profitable, in my opinion, I would not invest in any company that is not making profits. We may have considered them during the pandemic. At this point in time and going over the next 10 years, I would shun them like the plague. I don't want to go into too much detail. I'm not an unsuccessful investor or trader. I've made quite a bit of money over the years. I've tried every facet of trading. I learn, like everybody else, every day. And at this moment in time, that's the way I'm investing. If you haven't subscribed to the channel, push the subscribe button. Give us your comments. Join the conversation. Let me know where we're right. Let me know where we're wrong. As everybody knows, I'm headed to the White House, and we're building an independence party across America. Come help out. Until we meet again.